CP24 Money.
We now go live to the TMX Broadcast Center to Darren Farwell, Senior Wealth Advisor with Farwell Wealth Management at Scotia McLeod. Hey, Darren.
Hello.
All right, now last week when you were here, the market had already dropped from its high in 2011. Since then, things have gone from bad to worse. What's happening today?
Yeah, it was a veritable roller coaster today. I mean, surprisingly, the Canadian market started up. Then by midday, the market had turned down. In fact, it was down about 90 points at one point. Then we got some news out of Japan that looked like they were going to making some progress on cooling the reactors, and the market bounced up. But as I look here today, at the end of the day, we're down again. So there's been a lot of volatility. Similar situation in the United States. The reason why isn't much of a surprise. I mean, there's continued uncertainty about what's going on in the Middle East. There's ongoing continued uncertainty about what's happening in Japan and what the results of that's going to be. The market hates uncertainty. And whenever there's uncertainty, the market's bound to go down, because what happens is you get nervous short-term investors who are selling, while that same uncertainty keeps long-term investors from buying. So you have more sellers and buyers, the market goes lower.
All right, so how's gold doing through all of this?
That's the question of the day, Nathan. I mean, I was here last week, and gold was doing well. I'm here this week, and now gold is $34 an ounce lower. You would think with all of the risk and turmoil going on in the world right now, that gold would actually be trading higher. But what seems to be happening is gold is trading with that whole basket of commodities that in the last couple of days is actually lower.
All right, so should investors be moving to cash in or sitting on the sidelines during this market volatility?
Yeah, that's a great question. You know, long-term investors, disciplined investors should always be looking at personal needs and objectives as opposed to what's happening in the stock market in the short term, because actually we never know what's going to go on in the short term. Despite the current drop in prices, there's still plenty of good companies out there with good profit outlook that are pay you dividends along the way. So this pullback is an opportunity to buy good quality companies.
All right, cool. Thanks, Darren. We'll talk to you soon.
Thank you, Nathan.
All right, it's 3:54, 7